Welcome back to the channel, guys. So we are back with another video. So we are going to do a couple of videos about currency correlations in full details. So we are going to do all the major USD currencies, which will be GBP, AUD, New Zealand and Euro, in full details of all the currencies they are correlated with. So we'll do 4 separate videos for each currency in full details. So this video is about GBP. So reminder, anyone who hasn't joined our Telegram channel, please join. It's free for a limited time, and those who haven't subscribed, subscribe and hit the notification bell so you don't miss any video when we post. So let's jump right into it, guys. So GBP, these are the currencies we have that are doing a very clear correlation with GBP USD. So we have GBP USD, GBP JPY, GBP AUD, GBP Swiss francs, GBP New Zealand and Euro GBP. So we have two things. We have a positive correlation and negative correlation. First thing to note, we always have as a pair GBP USD. So in this pair alone, GBP is the base currency and USD is the quote currency. So in this case, if GBP USD is 1.28, this means you need 1.28 USD to buy 1 GBP, 1 pound. So in this case, we are looking at correlations. And what is correlation? This is how one currency can influence all the other pairs. So GBP as the base, you can look at all these pairs, they have GBP as the base, and Euro GBP has GBP as the quote currency, which is the last currency at the end is the quote currency and the first is the base currency. So GBP, with all the currency, with the pairs where GBP is the base, they have a positive correlation, which means when GBP goes down, GBP USD, GBP JPY will also go down in the same trend as well, and all the other pairs that have GBP as the base. And if GBP is going up, if GBP is going down, any pair that has GBP as the quote currency will go up, because it means GBP in that pair will be weaker. So guys, you need to look at this very clearly with a very keen eye, because this is some easy and smart analysis which will help you create more opportunities in the following analysis you will be doing. So let's take some examples here. I have drawn out a good trend line here. As you can see, GBP was in an upward trend straight from 15th till 22nd range that is moving to the upward side. This is something like a rising wedge. So on 22nd, GBP broke the rising wedge and it retested on 23rd and created that impulse move. There was some news right there that pushed the price down, came back again, retested on the same level and went down again on the 22nd day, which was the 24th. Now if you look at this market structure as it is right here, you can look at GBP JPY has a very strong move to the upward side, breaks, retests, and on 23rd you see that impulse move, and on 24th you see that continuation again to the downward side. Now this market structure is generally similar to GBP USD. Upward trend, impulse move to the downward side on 23rd, impulse move on 24th, same as GBP JPY. So we are going to look at all the pairs that have GBP as the base, and they will also have the same market structure. Now look at GBP AUD, upward trend, range, impulse move on the same day, which is 23rd, and on 24th it was a slow momentum to the downward side. But what caused this? Because this pair is against AUD, and AUD had a different structure too. So it was there was a power struggle between GBP and AUD, so it created a range on 24th. Though GBP USD was moving down, a very impulse move on 23rd, and AUD also had that same impulse move, which caused GBP AUD to create a range on 24th. So that day, GBP AUD had no opportunities to open positions. So let's look at GBP Swiss francs. If you look at GBP USD and GBP Swiss francs, that correlation is in perfect sync. So you have a trend to the upward side, you have those equal highs, and then you have a break on the same day. Impulse move on 23rd, pullback, retest on the previous supports. Let's try to label the supports right here. Retest on the previous supports, and then the following day you see that move again down to the support that was created on the previous day. So this shows you the correlation. So let's look at GBP New Zealand. It's the same exact market structure. There is a move to the upward side in a rising wedge, and if you look at GBP USD, it is the same thing. So you have to note something, that this correlation, it doesn't mean the market structures for both are going to be 100% the same. It is going to be a general trend which is moving to the upward side or the downward side. If there is a break, all the GBP based currencies, all the pairs with GBP as a base currency, they will have the same break. Breakout will be a breakout, and a pullback will be a pullback if the market structure for that day is that on GBP USD. So if you look at GBP New Zealand, same thing. On the 23rd you have that impulse move, and from 15th till 22nd you have that rising wedge, broke on 22nd, retested on 23rd, and the impulse move, as you can see. But on 24th there is a little bit of move, so it was not that much, because New Zealand and AUD had that move also, so there was a power struggle for those pairs, GBP AUD and GBP New Zealand. So lastly, we are going to look at Euro GBP. So Euro GBP has GBP as the quote and Euro as the base. Now this is going to be a negative correlation, which means if GBP has an impulse move to the downward side, Euro GBP will have an impulse move to the upward side. And as I'm going to label right here, you can look at on 23rd, let's label that white, and you can look at on 24th, and let's label that yellow. If you look at Euro GBP and GBP USD, what is the relationship there? It's a negative correlation. It means GBP goes down, Euro GBP goes up, because GBP in GBP USD is the base, and in Euro GBP, GBP is the quote currency. So on 23rd, we had an impulse move to the downward side, a retracement to the support that was broken, and on 24th, we had a confirmation again to the downward side and an impulse move for the entire day on 24th. So it was a downward impulse move on 23rd, downward impulse move on 24th. Look at Euro GBP, impulse move on 23rd to the upward side, and another continuation move on 24th. Now this is a negative correlation, and if you look at from 15th till 22nd, it is a downward trend, and GBP USD from 15th till 22nd, it has an upward trend, a little bit of range, but eventually you can see that we have higher highs, which means it's an upward trend. Now this is a negative correlation, GBP USD and Euro GBP, and all the other pairs have a positive correlation. Now how do you get opportunities in such a situation? It means when you're analyzing GBP USD and you have such pretty confirmation, either to the downward side, short or long. It means try and look at the other pairs that have a GBP as the base currency, which means GBP is the first pair in front here. All this, look at them and see who has a good confirmation so you can buy both pairs at the same time. So GBP USD, let's take an example. We had a confirmation of sale on 24th. If you can look at the chart right here down, 24th at 9:09 hours, GBP JPY 24th 09 hours confirmed, and there was something like 50 pips to be done that day. GBP AUD on 24th, GBP had a range, so there was nothing there. GBP Swiss francs on 24th at 9, there was an entry, but it didn't work out properly. But as you can see, at the end of the day, you had something around 30 pips, but the risk was a little bit high for this one. So this one, the entry was back above here. The entry was just around there. That was the entry on GBP Swiss francs. So as you can see, there is some good analysis that you can do on all these pairs so that you can capitalize on the correlation of currencies. So that was our video about correlation on GBP. So we'll be doing all the other major USD pairs. So thanks for watching, guys, and keep it up.